Hello everyone, this is Nikhil here and welcome back. Today I want to discuss with you about 5 biggest mistakes which you should avoid in your 20s because so many people end up making these mistakes that they end up being broke or in a huge debt. Now I want everyone out there to be successful and that's the goal of this channel, to provide a financial knowledge to today's youth which schools and colleges don't provide. So if it's your very first time here in this channel and you want to learn more about investing or few tips on how to grow your wealth in your 20s, particularly in India itself, start now by subscribing so you don't miss anything out. With that said, let's get into it. The biggest mistake among all is having an expensive lifestyle. And once you graduate and you start working, you know that you can pay. You don't have to borrow money from your parents or your relatives anymore. Hence, what happens is that you tend to buy things which are slightly above your pay grade. It can be expensive cars, renting bigger apartments, or as simple as getting new gadgets. And these are a big no when you're just starting in your career. Studies show that youth today are more inclined towards being in debt. Studies also show that youth today who have higher income, they tend to be taking more loans. Now, debt can be great if you know what exactly you're doing. But if you don't, in that case, it will lead you unnecessarily stressing over it. Few golden rules which I have read and I try to follow are: you should not be spending more than 25 to 26% of your monthly income on your housing, or you should not be spending more than 10% of your monthly income on your vehicle. If you're spending more than this, then trust me, you're making a mistake because in reality, you really can't afford them. Now, this is one of the biggest concerns in today's generation. Youth don't understand how to exactly use a credit card and what are the charges applicable. Simply because this was never taught in school, neither did the family ever advise them how to use one. Now, using a credit card can be an amazing way for your daily purchases, as for every transaction that you do, you earn the sweet rewards like cashback, airline miles, and even points for every time you swipe. I personally use 4 of them. But if you don't pay off your balance in full each month, then using a credit card to borrow money for long term can become very expensive. Also, something which you need to understand is you should not be spending just to earn those air miles or points. Intent should be that you're anyways going to purchase that particular item, might as well get some points for free. The average annual interest rate in India for credit cards is 41% as per the report 2019. Now that is very expensive. People tend to make this mistake either because they forget that they have to pay or simply because they don't have the money for it. Now, if you don't have the money and borrowing is the only way out, in that case, use personal loans or balance transfer, as those methods will simply charge you much lesser interest as compared to borrowing money using a credit card. It is very important for you to understand how the credit card cycle works because there's something which a lot of youth they don't know and they still use a credit card. Now, every credit card will have an interest-free grace period where the charges made during a particular month or billing cycle won't have interest if you pay your balance in full. Now, for example, let's say you use your credit card to buy a Honda motorcycle for about 50,000 rupees on 15th of April. Then on 30th April, the bank sends you a statement of all the transactions made in April with that credit card. Let's assume that you use your credit card only for the purchase of the bike. So 30th April is your statement day. Now statement date will also indicate when the payment is due. And let's say about 20th May. So 20th May becomes your due date. As long as 50,000 is paid by 20th May, no interest will be charged. In this case, the grace period which the bank has given you is about 36 days. That is from 15th April all the way up to your due date, that is your 20th May. Now I hope you guys have understood what exactly is your statement date and what is your due date. Now let me tell you how exactly interest will be charged if you don't pay the amount back. Now, 2 things which you need to keep in mind is banks apply a daily rate of interest to any credit card balance at the end of each day. The daily rate is calculated by dividing the annual rate by 365. So your annual rate in India is about 40%, which would mean 40% divided by 365, that is about 0.11. So you will be charged 0.11% of 50,000 rupees on a daily basis. That is approximately 55 rupees. Second thing that you need to keep in mind is if a credit card balance is not paid in full, then the grace period will not be applicable. So from the date when you have bought the motorcycle, from that day interest will be applicable. So in this case, the interest in 50,000 rupees will be applicable from 15th of April. On top of all this, banks will charge you additional GST of 18% as well. Grace period varies from bank to bank, so it is very important for you to make sure that you check with the salesperson when exactly is your payment due date. This is just the case where you're not paying within the due date. Now, if you're holding this payment for more duration, the charges are even worse. An extra 10% would be owed after just 3 months, while waiting for an entire year could cost you like almost 56%. Also, not paying your credit cards on time spoils your credit score. A healthy credit scores have a lot of benefits like higher credit limit, lower interest rate on your mortgages, on your auto loans, and it definitely helps you with the insurance as well. So make it a point to consistently pay your bills on time and keep your balance as low as possible. Generally, you should be aiming to keep a credit usage ratio below 30%. That means that if you have a credit limit of 10,000 rupees, try using a maximum of 3,000 rupees. These are few small tricks of maintaining a good credit score. If you have understood so far, make sure you smash the like button and subscribe as well. It will definitely help me with YouTube algorithm and on a personal level would definitely motivate me to create more content for you guys. Most youth are under the assumption that we have sufficient time to retire, and hence we delay thinking on this matter. Most of us, when we start working, we're pretty much in our early 20s, and the retirement age in India is about 65 years, which means we are approximately 45 to 50 years. At the core, I strongly believe in the FIRE movement, and for those who aren't aware of this term, FIRE stands for Financially Independent Retire Early. It's an entire community out there with the mindset that you don't have to be 65 to 70 years of age just to retire. Personally speaking, what I do is, let's say I make about 1 lakh rupees a month. When I get a paycheck at my day job, what I think is if I invest this amount in a bank and create a fixed deposit itself, the bank would give me a 6% interest rate. That's about 6,000 rupees a year, which is about 500 rupees a month, which I can spend. What people don't understand is the power of compounding. Warren Buffett, who is actually one of the greatest investors, he says that compounding is the eighth wonder of the world. So basically, the earlier you start saving, the more time you have, and the money gets compounded over the years. So do more research on compounding, try and understand different investing opportunities. Try to stay away from debt as much as possible. Now, not all debts are bad debt. Debt used to buy a home or start a business has a collateral and can be used as a leverage. This can be a good debt provided you get a good deal, but your consumer debt is always a bad debt. Now, this includes your credit cards, your car loans, your student loans, purely because of the high interest rate. The sooner you begin saving for retirement, the better. When you start early, you can afford to put away less money every month since the compound interest is actually on your side. For youth, the best important advice would be to start saving as early as possible. Now, one of the biggest quotes for youth generation today is to take as much risk as possible, especially in your 20s. Completely for it, purely because the more risk you take at this particular age, the more failures you experience, and the more failures you come across, the more you learn. And this may be true, but what you need to understand is to take calculated risks. Now, just by taking risk will not get you a reward. You need to understand what can be the outcome if you take a particular risk and what is the risk to reward ratio. People jump into investing because their friends tell them to do so. People quit their jobs because they want to be businessmen or they want to be entrepreneurs without actually having a business idea. You need to understand what the risk is before you actually jump into it. Try to understand what a potential outcome can be. If the outcome is something rewarding and can create an impact in your life, then definitely go for it, irrespective of the risk. I also have done the same mistake where I entered the stock market and started buying stocks just because a friend of mine told me to do so. The result was quite obvious. I lost money. So don't just jump into it because someone tells you. Definitely take risk, but before taking them, do your own research, understand the outcome of it, and then take calculated risks. Work on facts and not on opinions. Understand what the risk to reward ratio is. Even if you fail, then you will always know what a potential outcome can be and you know where exactly you failed. A very important rule which a book Rich Dad Poor Dad by Robert Kiyosaki teaches us is the difference between a poor man and a rich man's mentality. Rich men always pay themselves first, and that's a golden rule right there. You always need to pay yourself first. You need to understand the basic formula of your income. People think income minus your expenses is your saving, but that's a poor man's mentality. As soon as people get their income, they start paying their bills, and this is not the right way to do it. What you should be following is income minus savings is your expenses. What this teaches you is to pay yourself first. This also teaches you how to exactly budget your money, as now you know exactly how much you can spend and what you can afford. One of the great ways to budget your money is by using a 50-30-20 rule. 50% of your income goes towards your basics. Now, this would be in terms of your rent, insurance, groceries, car payments, whatever are important requirements and necessities you manage within the 50% of your income. 30% of your income goes towards your wants. Now, this can be in terms of shopping, traveling, hobbies, and 20% of your income goes towards your savings. Now, this is a must. Now, this can be a great way to budget your overall monthly expenses. If your needs for a particular month is more than 50%, then don't take out the money from your savings. Remember, you're trying to pay yourself first. Take the money out from your wants. go out less that particular month, or drink less. There are multiple apps as well where you can track your daily expenses, and this helps you understand how much are you spending in a particular month and what are the unnecessary spendings that you did in the previous month. I use an app called Spendy. It's a very simple app and a very user-friendly app which actually helps me track my expenses on a daily basis. So with that said, you guys, thank you for watching this. I really appreciate it. If you think this particular channel or this particular video did provide you knowledge in any aspect, even in the smallest way, make sure you subscribe and hit the like button. I would really appreciate all the support. Also, if there is any particular topic which you would want me to create a video on, or any questions regarding this topic, just drop them in the comment section below or drop me a message on my Instagram and I'll try to get back to you as soon as possible. So with that said, see you all next time.